Good morning, Chris, and welcome. Thank you so much for agreeing to talk with us this morning. I wonder if you would start by just
Three, two, one.
Here we go!
Good morning, everyone, and thank you for joining our webinar, International Pensions Without Partitions. I'm Dougie Elliott. I'm Chairman of the Association of Pension Scheme Providers in the Isle of Man and a Director at Sovereign Pensions. It's an absolute privilege to be asked to moderate this today. We've got a great lineup of panellists and some great discussions for you. In fact, I can promise you this is about as exciting as pensions ever gets. Some of you are already well aware of the Isle of Man's established reputation within the international pension space, but for those that don't, I'll just give you a quick rundown on why the island is a premium jurisdiction for establishing and managing international pensions and savings arrangements. In 2020, Willis Towers Watson report on international pension plans highlighted that 63% of new schemes surveyed in the last 5 years were established in the Isle of Man. Comfortably and by some distance, the top for trust-based solutions. So why is the Isle of Man such a popular choice? It's an award-winning international finance centre. We've been Best International Finance Centre 4 times out of the last 5 years, and we offer dedicated pensions regulations that have been in place for more than 20 years. Also, can I just remind you at this stage that when the panel event is on, we would like your questions. Please go in and do them anytime you like. You will find links probably on whatever you're using to watch us. But in case you're not, you can go via slido.com, slido.com, using hashtag capitals PWP21. So we've only really touched the surface where the Isle of Man's expertise, but for now we'll start by looking at the wider international pension marketplace. Last week I had the pleasure of catching up with industry expert Chris Bulleyment for a market overview. Chris is a partner at Deloitte London and heads up their dedicated international pensions practice. He's a chartered tax advisor and has been working for stakeholders in this space for over 20 years. He brings an insight into this area gained from working with sponsoring employees, trustees and pension plan members alike. That's my reading bit over. And we now, without any hesitation, ask Chris to speak to us. This morning. I wonder if you would start by just adding a little bit more about yourself and your background.
Good morning, everybody, and thank you for having me. Fantastic to be here, albeit in a virtual sense today. Unfortunately, not able to travel over to join you. Absolutely. In terms of the background and what we focus on, we're involved in all aspects of international pensions. So ranging from the design and structure of a plan through to the implementation and operation. From a tax perspective, we focused very heavily on both UK and overseas tax implications, looking at the implications for employers, trustees, and the members of those plans. And those tax implications can be quite wide-ranging, from income tax to social security, through to capital gains tax, corporation tax, and even some complex inheritance tax implications. The very nature, as I'm sure many people in the room will be aware of, trust arrangements is they're very complex, and tax regimes have changed a lot over the years. So it really requires our focus on those many sort of varied areas. And through that, we obviously build up some long-term relationships with trust companies, and obviously do work very closely with them in the management and operation of those plans. And increasingly, we've focused our work on the governance aspects of international pensions. Tax, bizarrely, is becoming a lesser issue for many people, and actually the focus is really around the governance and operation. And I think the other thing worth mentioning here is that our focus has shifted in more recent years into looking at emerging markets and how they're using international pension plans.
That's really good to hear, and it's good to hear that really the tax angle is moving away. I think we would support that as an island. International pensions cover an awful wide variety of arrangements. Can you summarise some of those types of arrangements and what you typically see in the market at the moment?
Yeah, I think absolutely right. I mean, IPPs mean many different things to different people, and I think it's fair to say there's very rarely a one-size-fits-all definition these days. I think historically, IPPs were very focused around tax-efficient arrangements, and members in the room will be familiar with, forms of UK tax approval like corresponding acceptance. I think increasingly that has shifted away. And that's because of the changes to tax regimes, making the tax efficiency significantly more complex. I think where we see international plans now used most prevalently is for cadres of specific populations. So it might be senior executives, it might be nomadic employees who are working in multiple locations, or it might be for people working in those jurisdictions where it's simply not possible to either remain in their home country scheme or join a local country scheme either. So a real mixture of different drivers behind the use these days.
You talk about the drivers there and what causes people. Can you expand a little bit on that? What are the main drivers for organisations taking international plans these days?
Yeah, I mean, those reasons are really widespread, and I'll go through a number of the reasons that I see in the market. And I'll reiterate the comments I made a moment ago that I think tax as a driver has really dropped away. And that's largely because the opportunity to enjoy tax efficient savings through international pensions in many locations has simply disappeared. And actually employers have changed their mindset and have accepted that's the case. And they're looking at the other benefits that international pension arrangements bring them. I think first and foremost, simplicity is the key to this. One pension pot for multiple assignments can be a really attractive thing. And having a simple single repository for that pension scheme and those pension savings can be really attractive. And replicating pension schemes, so replicating pension provision from home country, where it may not be possible to stay in that home country scheme whilst perhaps working overseas, is another reason why people want to look at international schemes and the flexibility that they bring. Back to this point around tax relief, not being encumbered by a requirement to fit a set of rules is often really attractive and allows that flexibility that people are looking for. And flexibility is another key reason behind all this. So being able to operate in different ways for different populations, in a way often not afforded by registered pension schemes in local jurisdictions, is one of the key benefits of an international plan. Harmonisation, so you can give the same arrangement to all your employees, and that need for consistency, that drive for consistency, we see more and more. And interestingly, I think the final point I'll add on this is that flexibility can actually drive some sort of new markets or some new opportunities. What we're seeing now for the first time is that organisations, and I use that word carefully, are using this as an opportunity to reward people other than employees. So we're seeing contractors of organisations being included in international pension arrangements in a way we've never seen in the past.
That's really interesting, particularly the last comment. Something we will need to explore more, maybe with your help. Are you seeing any particular specific geographies or regions for international pension plans at the present time?
Yeah, and I think if you go back to those drivers we just talked about, I think we are starting to see themes emerging on this. And I think it's fair to say this will continue to evolve over time. I think European-based schemes have always been relatively popular and remain so today. In fact, I'm seeing a fair focus from my European-based clients around the use of international pension arrangements. Secondly, I think we're seeing specific locations like the Middle East where there is, changing requirements around funded workplace savings, and particularly in parts of the UAE in the last couple of years. I think that's the real start of a change over there. I think we're going to see other parts of both the UAE and the wider GCC region both looking to bring in funded workplace savings requirements, and international plans are a really obvious solution in that space. I think in the Far East, in places like Singapore, they've been traditionally popular, and again, it's because of the local regime and the inability or the inefficiency of saving through local regimes. But I think where it's fair to say it's difficult to use international plans, and continues to be so to this very day, is in the US. I think the reporting and tax regime in the US continue to make it very challenging for those organisations to look at international pension arrangements.
You touched on location there for plans. What do organisations look for when they're deciding where to locate them, and what makes the Isle of Man so attractive?
Yeah, I think I'll probably again answer this with a series of factors, but I think first and foremost in this, they're looking for experience and expertise. They want a location that can drive quality, and that quality often comes through a prevalence of providers and some competition in that location. My clients often ask me, where do other people locate their plans? And the Isle of Man obviously comes out very favourably when it comes to that question. Tax neutrality will remain really important in terms of the roll-up of assets within the plan. Of course, there will and may be tax in locations where members are resident when saving, and indeed where they're resident when receiving benefits from the plans. But ensuring that the assets within the plans roll up free of tax is really important to this day. I think the next thing is regulation. And increasingly I hear this from my clients, that they want to have the comfort that the location where the plan is operated from has a strong regulatory regime. And the existence of a pensions regulator, for example, is a really important factor within that. It sort of demonstrates a level of institutional governance that is often aligned with the client's underlying approach to regulation, and it gives them great comfort from that. And the sort of FATCA style compliance and reporting, again, I'm sure that people find it challenging at times, but I think it actually is really important to the sponsoring organisations. And then there's some real sort of practical sides of this that, of course, it isn't going to change when it comes to places like the Isle of Man. The time zone, the currency, the language. These are still important factors when it comes to provision. But I'm going to go back and reiterate one point as a sort of a final comment on this, and it's around choice. Having choice and having a competitive market is really healthy when it comes to the operation of plans and the attractiveness of a particular location.
Well, that's fantastic. Thank you for that. It's nice to hear that we're on the right lines when we're organising and thinking of how we should and will promote the Isle of Man. What are the other main features that organisations look for when designing and implementing an international scheme?
Yeah, I think first and foremost, strong governance. I think I've touched on that already, but it's an important point to emphasise. They're looking for providers, trustees who bring something proactive to the table when it comes to working with an organisation's own governance structures and aligning their approach on the plan provision with that particular organisation's approach to governance. And you'll hear that more and more in the coming years. They look for independence, and that's often something that we've not always highlighted as a really important point, but employers really want the challenge, and they want to see that the provider of the plans is demonstrating strong independence in their role as trustee and administrator of the plans. They want to look at cost. I mean, it's always going to be there, I'm afraid, and I think it's going to continue to be an important factor. But I think that's where the competitive environment is going to help drive that when it comes to places like the Isle of Man. And I think they're looking for communication, strong lines of communication between the trust company and the sponsoring employer, strong lines of communication between the trust provider and the member. And again, I think historically that's not something we've always seen being at the forefront of the requirements, but I think increasingly employers want that support when it comes to the operation of the plan.
Oh, that's good. From a member's perspective, is there anything you want to add on that? Anything you would like to highlight that members are looking for?
I think the first thing is simplicity. What they don't want is some complex arrangement set up and dreamt up by some tax advisor or other consultant. So that's the first challenge for people like me. This needs to be really easy to understand, and more than anything, it needs to align with what they're used to when it comes to their historic pension savings arrangements in their own country. They want ease of access to information. So a strong online portal is really important so that members can see stuff instantly. We're in an age where people need information at the drop of a hat or the click of a finger. And members are really demanding more and more functionality when it comes to the online capability of providers. They want investment flexibility. You know, members often have some sort of complex and very bespoke investment requirements, and they're looking for those providers that can help them to achieve those types of investments. And finally, they're looking for value for money, and I use that term very carefully rather than cost, because I think a lot of members I work with accept that some of the complex structures some of the complex investment structures they want to go into do cost money and does take the proper due diligence, and they're willing to pay for that. And actually, you know, where that is properly considered, I think they will pay for that. So I think it's more of a value for money point than necessarily a low cost point.
And just looking at probably the most difficult question of all, to put your neck really on the line, what do you see for the future for international plans? Are they going to be moved towards international plans? Is it going to continue? Are they going to continue to expand?
It is the most difficult question, and thanks for saving it for last for me.
That's a pleasure.
I think this is a distinct possibility. We'll see a relatively significant increase in the use of international plans, and that's for a number of reasons. I think, firstly, as I mentioned already, local tax regimes are increasingly restrictive. So if I look at locations like the UK, the savings limits are really, really quite low for senior individuals, high-earning senior individuals. Secondly, local tax regimes are very fragmented when it comes to pensions. You go a long way to find two regimes that deal with pensions in the same way. And what you end up with is different populations of people under very different pension arrangements, whereas employers are increasingly looking at harmonising benefit provision. And I think the dynamic of the workforce is changing. The last 18 months, 2 years has taught us that. I think mobility will continue to be really important, but I think we'll see people working from many different locations, and the complexity that creates on a cross-border perspective when it comes to saving into traditional pension schemes, I think will drive people towards looking at simpler but perhaps slightly less tax efficient international type arrangements. I think therefore IPPs might be used in quite a different way to historic arrangements and how we've seen them used in the past. I think again, and I make no apologies for labouring this point, they're not going to be tax focused. The new age is all about fairness and harmonisation of terms, not about what's the most tax efficient delivery of retirement savings. And therefore I think what we'll see international plans used for is perhaps as a top up to a local regime. So you might find that places like the UK say, look, you can only have £4,000 of tax efficient savings. And then it becomes very tax inefficient. And actually, therefore, it's much easier if we then provide that top up through some different unapproved type arrangement from a UK perspective. And that's where an international plan might come to its own. I think we'll see plans for senior executives where they're being tasked with working in multiple locations around the globe. And again, having many different local pension schemes is really unattractive because of the administration hassle for both the employer and indeed for the executive themselves. I mentioned plans for emerging markets. I mentioned the Middle East. I really think we're at the start of a big change over there. And certainly the conversations I've been having with regulators and governments over the past 18 months, tells us that we're going to see other parts of that region introduce something very similar to what we've seen brought into places in Dubai, parts of Dubai already. And I think we might see consolidation of existing plans. I think what we might see is people bringing together their existing international or domestic arrangements. And again, looking for that simplicity of one-stop provision in one place. So I suspect it's an exciting time for the industry, one which demands a lot of change in terms of how they approach international plans. I think what you're left with is looking at the existing plans and operating those in a robust and compliant manner, but also thinking about how you go to market on new plans and where the opportunities really are. I certainly, as a sort of final, can't recall a time when I've had so many inquiries about international plans as I have over the last 18 months, 24 months, and from so many different industry sectors. Traditionally, we've seen this as a financial services play, but actually we're seeing it across so many different sectors now. And I think that's probably indicative of just how big the opportunity is. So I'd probably leave you this morning saying that it is truly exciting times when it comes to the opportunity in the market, that you probably need to think a little bit differently around what the opportunity is. It's probably not the same as it's always been, but I'm sure that over the coming years you're going to see a real increase, a real spike in opportunity in this space.
That's absolutely fantastic. Interesting is a good word. Inventive, obviously we're going to need to be.
Yeah.
All things I feel we can do. Chris, that's been absolutely fantastic. It's great to listen to somebody like you and listen to what you've got to say about this intriguing subject. I hope that we will be able to work with you in the future as an island and look forward to that. And really, thank you very, very much for agreeing to do this today, for being so interesting and for telling us the truth.
Well, thank you very much. I'm sorry I couldn't be with you, but I hope you have a fantastic day.
Thank you, Chris. That was really insightful. And picking up on one of the points Chris made, the potential for growth and development in the Middle East leads us nicely into our next session. And due to the different time zones, this is pre-recorded. Some of you will know the Isle of Man worked with the DIFC authority on its employee workplace savings plans, dues for short, arrangements. So last week, Jack's John Visa, legal officer of the DIFC authority, joined Chris Kane, who's client service director at the Middle East for Equium, to discuss the Isle of Man's involvement in dues and what the evolving future pensions looks like across Dubai, UAE and GCC. Chris, over to you.
So good morning everyone, and thank you very much for taking the time to join this recorded webinar this morning. My name is Chris Kane and I work for Equium based in our Dubai office, and as a proud Manxman it's an honour and privilege to be asked by Finance Isle of Man to be part of today's session. Equium use the Isle of Man as the chosen domicile for all of our IPP trustee business, and that's mainly due to the island's long-standing and robust pensions regulations, and also the level of knowledge and experience that's based there to help support our services to our clients. I'm joined today by Jack Visser. So Jack is the Chief Legal Officer in the Dubai International Finance Centre, or DIFC as it's commonly known, and Jack is widely considered as the driving force for workplace pension and savings reform in Dubai, and was fundamental to the implementation of the recent pension changes that took place in the DIFC. So welcome, Jack. And again, thank you very much for taking the time out of your extremely busy schedule to join us. So what I'd like to do is just go through a few questions with you, Jack, if that's okay. And the first one, if we can get straight into it, is if you could just explain the recent changes that have taken place in the DIFC in creating the new employee workplace savings and pensions benefit, and also on top of that, how those changes have been received by employers and employees.
Thanks, Chris. Well, historically, as you know, the UAE and the DIFC had an end of service gratuity regime that only paid a defined benefit to employees at the end of their employment. And this gratuity merely accrued during the period of employment and was calculated only at termination of service, essentially as a function of time served and the employee's final basic salary. And it has been recognized for quite a number of years that this regime has a number of shortcomings, which led to a working group being convened by the governor of the DIFC roundabout in 2016 to actually go out and benchmark best practice elsewhere and to come up with recommendations. Also within the context of changing demographics of the expatriate workforce in the UAE, who previously sort of came on short-term assignments, but now typically stay much longer in the country and may even retire here on the back of a retirement visa scheme that was recently announced by the UAE government. And this working group methodology essentially led to recommendations for legislative change, which took place in the DIFC in February of last year, both by way of amendments to its employment law, but also in terms of the financial services regulatory regime that now essentially mandates a defined contribution regime, whereby monthly contributions have to be paid by employers into so-called qualifying schemes that are regulated by the Dubai Financial Services Authority, or the DFSA as it's called. And these are regulated as employee money purchase schemes. Now, the DIFC Workplace Savings Plan, or DUS as it's commonly known, is the default qualifying scheme in the DIFC, and it obviously has Equium Isle of Man as its master trustee and operator. And if you then look at how this has been perceived, obviously something that was launched at the height of COVID, and with people all of a sudden having to make monthly contributions as opposed to just accruing for a liability at the end of service. I think it can be said that it has been a resounding success, and it's essentially been going from strength to strength over the past 20 months. And just to give you an idea, we actually had satisfaction survey results that came back to us yesterday, which indicate that 94% of the employers in the DIFC are happy with dues and the way that it was implemented, and 80% of them would actually recommend dues to other entities outside of the DIFC now that there's a planned expansion. And also 97% of employees came back as either positive or neutral as to the impact that it's had on their employees. And we've done a number of surveys previously amongst employees in the DIFC, which sort of show similar satisfaction numbers.
Brilliant. Thank you, Jack, for the insights around that. And it's probably fair to say that the Isle of Man has played a prominent role in the creation and implementation of the benefit. From your perspective, could you explain how you feel how important the island's role has been in shaping the regulations and also in the overall success that you've outlined in what you've just said?
Well, it's the Isle of Man regime, the IPP regime, featured quite prominently in helping to shape the regime that we have now in place in the DIFC and the subsequent success of the dues plan. It sort of first came to light in the global benchmarking exercise that we did prior to the introduction of the current regime, where we looked across the board in a number of jurisdictions, and not just the ones that are closest to you sort of geographically, but across the world, also in places like Australia, Singapore, and Hong Kong. And it featured quite favorably in that benchmarking exercise. And that as sort of evidence of that, the DFSA's EMP, their employee money purchase scheme rules, that they ultimately then adopted for the regulation of the qualifying scheme regime in the DIFC is substantially modeled on the financial services, the IPP regime in place in the Isle of Man. And it's also similarly, so that's just from a regulatory perspective, but obviously when we built the rules for the scheme, having had that favorable feedback and sort of the Isle of Man as the example from a regulatory perspective, and then ultimately choosing Equium, Isle of Man as the master trustee of the scheme. Obviously, then a fair amount of reference was also made to other examples in the Isle of Man when we actually built the rules, and that has all been very well received and obviously been very successful subsequently.
Brilliant, thank you, Jack. And just to finalise, or the final question from me, obviously the DIFC has changed the way that it sets out its benefits around workplace savings and pensions. How do you feel now, or see the future for the evolution across the Dubai, the UAE, and the GCC going forward?
Well, if you look at the level of interest that it's sort of generated over the past 20 months, and this coming with this changing demographic of on the expatriate workforce that are staying much longer and can very well now retire here, and you also look at the problem that sort of national governments in this country and elsewhere in the GCC are running into by continuing to maintain defined benefit schemes. It is clear that dues was very much sort of a game changer in how this will go forward, and that the level of interest, not just from this country, but also from neighboring countries, where people have contacted us and come and sat down with us and basically asked us how we did this. It's very clear that this is pretty much the way that people will try and look at it going forward. Dues was always intended to be a pilot scheme for expansion into the rest of Dubai and the UAE, and also not just for expat workers, but also into tapping into the UAE national pool, which, as I said, is still very much based on the defined benefit model. And I think as the economy is sort of diversifying away from sort of carbon-based, and just oil and gas-based income, and where they need to look at diversifying their economy, and how do you attract talent, and how do you properly plan for people's retirement, this is becoming part of a much bigger debate, and there's obviously plans afoot at present to expand that, further in the country.
Brilliant. Thank you, Jack. I think it's a shame that we only have 10 minutes of your time to cover on the presentation today, because I think there's a lot more that we could get out of this, but it's really, really valuable to hear your insights. I mean, personally, I sit as a trustee of the dues plan. I'm also an employee that participates in it, and I can assure you that the work that the DIFC are doing is massively appreciated by not just by employees, but employers who are now both able to better plan their future financial needs. Thank you again to Finance Isle of Man for inviting Equium and for Jack to participate. I hope you enjoyed the information that you've just heard. I hope you enjoy the rest of the remaining presentation. And in Manx Gaelic, Gura Mayed, Slen Liat.
Okay, so now we move on to the panel part of the event, where I'm joined by Paul Colley, Director of Client Relations at Bowl & Co. Paul, Anne-Marie Hughes, Director and Head of Private Clients and Trusts, a bit of a mouthful, at DQ Advocates. And also on screen, we're joined by Nigel Simpson, Head of International Markets and Employee Benefits Specialist, Zurich International. Thank you for joining us today. Before we get into the discussion, could we just go around and let you do your proper introduction of yourselves, maybe 30 seconds worth? And
yes,
starting with Anne-Marie.
Yeah, sure. As you say, I head up the private clients and trust team at DQ Advocates, which includes our pensions team, and we've seen a lot of interest in the last year to 18 months in international pensions in the Isle of Man. So the work that we're doing in that area, and the variety of schemes and the way in which schemes can be flexibly drafted, is very much what I'm working on at the moment. Yeah.
Great, thank you, Douglas, and thanks for everyone for tuning in. I'm Paul Colley from Bowl & Co. I'm one of the directors there. We are, I think, the largest by market share trustee in the IPP space. I've been personally involved in IPPs for about the last 15 to 18 years. I've been a colleague of Nigel's at Zurich for 25 years previous to that. And yeah, we're seeing enormous interest from lots of different places around the globe at the moment.
And finally, Nigel, definitely not worst, but finally.
Thanks, Dougie. Nigel Simpson, Head of International Markets at Zurich International. Just about 30 years cross-border insurance experience on the Isle of Man. About the last 15 years focused on employee benefits, both in the IPP space, but also group life and disability.
Okay, to start with, we're going to have a little discussion on some preset questions while we wait for your questions to roll in. I noticed that we've got a couple in already, but more would be welcome. Don't forget, that's it, unless you've already got a button, slido.com using PWP capital, sorry, using, what's the one with the little gaze? Hashtag PWP21.
Well done, Douglas.
Yeah, nearly got it right. Okay, so starting for those first questions, Anne-Marie, we heard from Chris Bulleyment that he felt the Isle of Man as an IPP jurisdiction would be looked upon very favourably. What aspects of pension law and regulation in the Isle of Man do you think differentiate it from other IPP jurisdictions?
So I think from an Isle of Man perspective, a really important point is that the law and regulation is multi-layered. So because our schemes are trust-based, we have trust legislation in addition to the pensions legislation. Trust law in the Isle of Man has obviously been around for a very long time, is very well established and regulated. Trustees in the Isle of Man are regulated, and our law in terms of their fiduciary duties, the way in which the funds in which they are administering have to be protected is very long standing in our law. So that kind of is almost the first level of protection for members of these types of schemes. But on top of that, we also have our pensions law and regulations as well. So the pensions law in the Isle of Man, particularly in relation to international schemes, is very bespoke. It's quite user-friendly as well, which helps. The law has been around, as you know, for more than 20 years, as you mentioned before. And in addition to that, we have the regulations specifically for international pensions, which work alongside the trust law, the pensions law together. So I think if you look at everything in the round, we have a long-standing set of both laws and regulations in respect of the schemes themselves, but also the way in which those schemes have to be administered under our law, including for both the trustee duties and the scheme administrator duties. And because as a jurisdiction, we've had those laws and regulations for such a long time, the providers that are here who provide those services have built up that level of expertise, and we as a law firm work alongside those companies in helping them to kind of shape for the future as well the way in which schemes are to be run, and making sure that each time a new question comes in or a different employer has different needs, we can work together with the regime that we've got, but in a very flexible way. So I think with all those things together, the law, the regulation, the expertise and the flexibility of those rules, that really puts us as a jurisdiction at the forefront of international pensions.
Thank you. Chris also mentioned a number of times the importance of a robust regulatory environment being critical to sponsoring employees. What's the panel's view or experience of this critical aspect? Paul, can you take that one first?
Yeah, sure. I think building on what Anne-Marie just said, we did a quick pitch call yesterday with a client, and one of the primary things they wanted to speak about was we're all about governance and what can the Isle of Man bring, what can you bring as a provider. And of course, as Anne-Marie said, we've got 20 plus years of experience of this legislation. I think the Isle of Man was the first. It's the longest running regulatory environment specific to IPPs across the globe. And if we get back to fundamentals, why is it important for a trust-based solution? Well, it segregates the assets and they're protected then for the benefit of the members. That's critical, and that can happen in a number of jurisdictions. What sets the Isle of Man apart is the other multi-layered aspects that Anne-Marie sort of alluded to there before, where there are certain aspects of how the Isle of Man regulations have evolved that make it a much more beneficial jurisdiction. So our AEI reporting, for instance, we have a number of not exclusions, but we've got a number of benefits there for reporting, for FATCA particularly, AEI, so that we do a report as trustees every year, which means that sponsoring employers don't have to do that. In other jurisdictions, there might be a much higher level of reporting overhead expected of the employer. So that's just one benefit. And when you combine all these things together, it means that housing your IPP in the Isle of Man is a safe, stable jurisdiction. It's well tested, it's well tried, and it gives sponsoring employers the confidence to place them here.
Nigel, do you have anything to add on that?
Talk about member outcomes on the back of it. So we see the governance model and the SLAs that provides, both at a provider level, but also at an employer level, supporting ultimately the member outcomes that come about. It ensures payment. It ensures that segregation of assets, as Paul talks about. So unfortunately, during COVID, we've seen a couple of companies actually struggle and go out of business. That's left us in a position where the trustees enabled to maintain that provision for the members. What it does do is in attracting those big companies, those companies that trust the Isle of Man, it builds confidence for providers to invest. So more member facing, more communication, more digitization. The more engagement that we're able to create with members, ultimately that will go on to improve the member outcomes. So that structure that the Isle of Man has put around pensions enables it really to get down to the root and branch, which are the members of these schemes.
When I'm listening to pension events these days, I often hear delegates referring to retirement or employee benefits in addition to pensions. Is this just new jargon, or there are real opportunities for sponsoring employees to use IPPs in a more flexible way? Paul, maybe.
Yeah, I'll start with this and maybe hand over to Nigel afterwards. So the pensions legislation is obviously quite flexible on the Isle of Man. The way that we write trust deeds gives quite a wide degree of flexibility of how they can be used. So we do see them used to fund end of service gratuities in places like the Middle East and the GCC. We do see them occasionally used for deferred compensation plans. And we do see them used as just top-up plans or long-term savings plans, particularly for members who might be based in hard to sort of reach locations, or where there might not be any pensions legislation on the ground. Pension provision could be distressed sort of countries in terms of the assets that might be available to invest in. So there are a number of different uses, and obviously flexibility of payment out as well. I think Chris mentioned it in his presentation, that domestic schemes get very specific and very detailed in how and when you can take benefits. And the IPPs remain very flexible in that respect, which means that they can be used for a multitude of solutions. I don't know if you've got anything to add to there, Nigel, about what you see coming through the Zurich.
Yeah, just quickly to add then, we still see end of service benefits, end of service gratuities being funded, at one end, but we're also seeing wider employee benefits, such as group life, death in service type benefits, wrapped into trusts alongside, customers, employers looking to looking to house their benefits with either single trustees or single providers. I think we will see some changes coming along. The employment model is changing, hybrid working, traditional employment, more contractors. The gig economy is increasing in importance. So we'll have to understand how employee benefits in those new types of working environment that are impacting us are handled by providers going forward. But great change, and as always, the Isle of Man will flex to meet the demands.
So how easy or difficult is it to set up a scheme in the Isle of Man? Anne-Marie, perhaps you could give us some insights into the process?
Yeah, so just following on really from what's just been said, I really like, as a pensions lawyer, international pensions because, as Paul said, that on the domestic side, the rules are quite technical and quite detailed and specific prescriptive really, as to the way in which the benefits can be taken. So with an international scheme, I much prefer it. It's so much more simple to understand and flexible in the way in which you've got carte blanche really in how you structure the actual scheme. So you'll have your trust deed, because it's a trust-based solution, obviously, which sets out the duties and powers of the trustee. And alongside that, you'll have your scheme rules, which is more of the administrative part of the scheme, I would say. So in terms of the contributions and benefits. But what I like about international pensions is because you can be so flexible, if you've got a multi-jurisdictional employer with people in different jurisdictions, you can almost schedule out in your rules the different ways in which benefits are to be taken and contributions made in those different places. So it is so flexible in the way in which you can create one of these schemes. You can tailor it really to any given employer's situation, without then having each time to go back and amend your core scheme document. So it's very user-friendly. There are ways in which you can change, for example, the currency of the scheme and just tailor it specifically to the relevant circumstances that you've got. So for me, that's what I like in kind of a nerdy legal drafting kind of a way, sorry. I really like international pensions for that reason. You can just kind of go for it with them and make sure you get the right solution for that particular situation.
Okay, thank you. And then very quickly, Paul, perhaps you could just tell us why trust? What makes it an advantage and more portable?
Well, I think first and foremost, of course, is that segregation of assets for the benefit of the members. I think also for a sponsor and employers, they like to have some distance between who's providing the benefit and who's looking after it on their behalf. So they quite like it from that perspective. In terms of IPP and portability, it's absolutely essential really to have it in trust, because the trust owns the benefit until it crystallises, i.e. when the member might take the money. So if you've got member A and they start working in Luxembourg, then move to Germany, then to France, then maybe across the pond to Asia and then to the US maybe, they're potentially going to be stuck with 4 or 5 different domestic pensions in different currencies with different regulations. And yes, there might be a few tax breaks remaining that help them along the way initially. But when they finally come to take their retirement benefit, they're going to really struggle with different currencies, how to manage the legislation, whether it's changed. And of course, they might retire into location 7, which is nowhere where they've actually been working for the last sort of 25, 30 years. So the portability aspect is really helped by the trust, because otherwise you have to have a provider like a Zurich or somebody else who has licenses in 20, 30 countries that you might work across, or an organisation, a multinational, might need to provide the benefit to. So that's why a trust is really important. But like I say as well, it gives the employers that robust confidence that the plan is being managed, and whoever the platform provider might be, so administering the assets, the trustee is there to challenge and represent the member on behalf of the sponsoring employer. So that gives some comfort. And like I said before, on the Isle of Man, it also gives you some exemptions in terms of some very important reporting for automatic exchange of information.
Okay, smashing. So now we move on to the questions coming in on Slido. And the first one, Anne-Marie, is very much going to be for you. Are you aware of any developments in Manx law to make it easier to implement pension sharing orders in divorce proceedings from other jurisdictions?
No, unfortunately.
Well, that's a simple answer.
Yeah, this is all about when somebody a member of a scheme divorces in another jurisdiction, and then there's an order that's been made in another court. At the moment, it's very difficult to enforce that order directly in the Isle of Man, and you have to go to the Isle of Man court to get an equivalent order here. So it's a really important thing to have your scheme rules drafted to allow for this particular situation, because we haven't yet enacted in the Isle of Man, particularly with the UK, we could a reciprocal arrangement to recognise orders between the UK and the Isle of Man. But at the moment, no. I was speaking to the regulator the other week about this, and there's nothing that I'm aware of at the moment, unfortunately.
Okay. Anybody else?
It's important there. That's the point, I guess.
I can't imagine anybody else has got anything to add on that one.
Though we do see these occasionally, and what we tend to find is that the two parties involved voluntarily agree, but there's no legal compunction on an Isle of Man trustee to fulfil any overseas pension sharing order.
But the courts will normally look at overseas ones.
You'd have to get an Isle of Man order here.
They'll look at it.
Yeah.
They'll look at the one already granted and
Yeah.
often go along with it.
But it's a pain.
What would you say in response to organisations concerned about the use of Isle of Man and other offshore locations from a reputational perspective as opposed to offshore such as Luxembourg?
I think it's onshore.
Sorry, onshore.
It tends to be landlocked, I think, these days, Luxembourg. So what I would say is that the Isle of Man has worked really hard for the last 30 years to sort of debunk a lot of these myths. There's many jurisdictions in the long past have had hiccups and issues, and that's why we've seen evolution in regulation and law and supporting law, not just in the Isle of Man, but across the globe, and it's become more and more strong. I'd say the Isle of Man today is one of the leading international financial centres. It's got a really strong reputation. It's on the OECD whitelist. And I would say, you shouldn't be concerned about using a highly reputed international financial centre. Isle of Man is not the only one, but that's the one we're here to talk about today. And I would say it's as strong as any.
Nigel, did you have anything to add on that?
Not really. The centre's been around for since the early 80s, and strong regulation is built up around it over that time. The Isle of Man government works really hard to ensure it's front and centre of that of that worldwide piece of work to make sure that regulation and money laundering, etc., is pumped out. So I think the reputation of the Isle of Man's very, very strong.
I think you're right. I think it was slowly but surely losing this. We are just a place for tax reasons is moving along very nicely. It's nice to see now that we're looked upon for other things, not just that. So what have we got next? How is South Africa positioned in terms of such plans?
Well, all I can talk about on that, I suppose, is it's a very big question. Is we do see some South African multinationals using IPPs. I don't think we see a great deal of use of it across Pan-Africa, for instance. There's not a lot of compulsion. There's quite difficult regulations in terms of currency movement. So we haven't, there aren't a lot of multinational corporations based in South Africa or headquartered there, which might be a key reason. But South Africa, I think, is an interesting market for IPPs on the personal and on the corporate side, and certainly an area I think we could see some growth and opportunity.
Anything to add?
No, I mean, we haven't seen much from South Africa in terms of pensions, more on the private client, high net worth, individual and personal family trust arrangements, I would say. But I would agree with Paul, there is a potential, definitely, I would say, potential there. I'm not sure if Nigel's had any experience of South Africa.
Yeah, we tend to see South African multinationals sponsoring, but covering global employees the same as any other multinational. So not necessarily decision making in South Africa, but covering their expatriate internationally mobile employees around the place, broadly the same as a multinational for Latin America or wherever else it might be.
And a very technical question next. What is the impact of currency fluctuations on international pensions, and how do we minimise the FX exposure? Paul, I think that's probably, you're a technical man. I think you could start with that one.
Well, I think both me and Nigel could answer this here reasonably easy. I think there's a couple of factors here. Is obviously there is that potential issue if you're getting paid in an X currency and the plan only offers investments in a different currency, then yes, that does give you some foreign exchange exposure, which wouldn't be particularly welcome. However, what we work with generally is platform providers that offer multi-currency in terms of how the plan can be administrated, paid out, and invested. So I think the simple answer is if you choose a decent provider with a good fund range, then you can choose investments that suit the payment currencies of your members.
Nigel, you got anything to add to that?
Yeah, absolutely. So, currency comes into play on contributions, on investment, and on withdrawal of benefits. And you need to make sure that you're able to do all three of those things across a large degree of currencies.
Basically, only take a currency risk where you're investing for investment purposes only. Otherwise, pretty much you can keep it in the currency they want.
Yeah, and I'm pleased to say that the providers that we tend to work with all have multi-currency and a reasonable range of currencies and a good range of globally respected investments. So it's not an issue that we come across, but it is an issue for sponsored employers to tackle and be wary of.
Okay, next question. What is the potential evolution of the Isle of Man pensions in the future? So, nice short.
I think I'll probably give that to Nige first.
Yeah, Nige, you first.
Because I think a lot of the evolution is in terms of how the platform market is going to respond to what members and sponsoring employers want.
Yeah, thanks for that, Paul. Under the bus. So it's what we're seeing is a drive towards simplification, as Chris mentioned in the start point. If you go back 20 years, maybe schemes were very much bespoke. They're not quite moving to sort of turnkey solutions, but moving that way. The bespoking of them tends to be around investment managers, contribution levels, etc., etc. So kept in a relatively simplified method. Where providers are having to go, and if you think providers could be insurance companies, they could be trust-based, they could be third-party administrators, and pure platform providers, right? So there are different types of provider in this space. The customer need will drive all of those providers to become more digital, to improve communication with the membership. And I think the companies that have scale will be the ones that thrive. That they'll be, if you're in an environment where you're confident of being able to build out your proposition, then you'll be able to do that to meet those needs. The entry cost from ground zero is very high into this space. It's a very digitized space, given that employees are spread across the globe. So, whilst we do see new competitors arriving, they tend to partner up, so that they will tend to find expertise in different fields, whether it be trust-based or TPA. But that digitization drive by employees, there's an awful lot of effort going into that space to improve engagement there.
Yeah,
Thank you.
Sort of building on that from a trust and regulatory point of view, then we have to adapt and respond to working with those. I mean, we've got a whole load of know your customer stuff that is being digitized now, so all parts of the member journey are affected by this. And I think, as we heard from Chris in his presentation, it's less and less about tax. There's less and less tax breaks available, and it's much more about global harmonization of benefits and financial wellness that can be replicated across jurisdictions. And I think we've got a number of different industries now, particularly high tech, where the employees are dictating where they're going to work from. So employers are really trying to deal with that, and an IPP solution is an ideal one to help you harmonise that sort of financial wellness benefit.
Okay, I'm very conscious of the time and the fact that we're running very short now. Perhaps I'm sorry for anybody who's put up questions and we haven't had time to get round to them. Perhaps we can let you, if you want to let us know where you are, we can answer those questions in writing. But perhaps we'll just take this very last one, seeing as it's quite apt for the time. Has COVID-19 accelerated the international mobility of IPP members? And how do the Isle of Man schemes assist this type of member? So have we seen people now working from home effectively more in international spheres? Anne-Marie, perhaps you.
I think this kind of ties into what follows on really from what Paul was just saying, and that is absolutely true, that with COVID, the way in which people work has changed, and people will be moving around the world, working for companies in a different jurisdiction to the one in which they are resident, and that is only going to increase. And now, again, as Paul mentioned, I think employees are almost dictating the terms of their work, and so employers have to be that much more flexible. That's just a given now in any employment kind of sphere. So having this scheme, one scheme, simplified, centralised in the Isle of Man as the hub, if you like, with all the employees wherever they are, that to me is going to be just so very important going forward. You can't really beat that, I guess.
Yeah, I mean, it's tricky because what we're seeing now is employees working in locations where the employer doesn't actually have an office representation, which is something that you probably wouldn't have seen very much in evidence at all. So has COVID-19 accelerated? Yeah, absolutely. Particularly, I think, in this space. And of course, more and more employers are moving away from focused office space to a more hybrid work solution, as Nigel sort of mentioned before. So I think we are going to see, the pandemic has certainly accelerated this, but this was happening anyway, you know. The cost of buildings, the green sort of impact of having employees travelling to and from a specific place of work every day. There's a whole number of factors that are driving this sort of move, and I think that's definitely part of the evolution. And the IPP was built for this 25, 30 years ago, and now it's becoming more and more of a mainstream solution, I think.
Okay, I'm very conscious now we're going to wind up, except that I've got a question in that I can't resist getting a very, very quick answer to from each of you. What do you say are the top 3 USPs for using Isle of Man for IPPs? Can we start with you, Nigel?
Okay, so one I haven't prepared for. I'd suggest that the expertise on the Isle of Man is strong, both in the trust sense and the provider sense. The regulatory environment that we operate in is strong, and it's supportive of businesses trying to grow. And the Isle of Man has generally been very nimble and agile in the changes that go on around it. And we're responding to corporatization, et cetera, in a very short order. So they'd be my three.
Anne-Marie, anything different?
Regulation, expertise, flexibility.
Thank you, that's very good.
Yeah, knowledge, capability, and robustness.
Yep, well, I would have to agree with all three of you. Paul, Anne-Marie, Nigel, thank you so very much for your contributions today. Thank you to everybody out there for tuning in and listening. I hope you enjoyed it. We did. And have a safe day and try to wear those masks and try to avoid any problems. Lovely to listen and see you all. Bye-bye.
Bye.
3, 2, 1. 3, 2, 1.